All right, Bulls and Bears, back with another dose. Economic reality, bold of the bus, BX4. Let's go ahead and get started with this. Gary down in Georgia. He said, I never do the shock face. I do it in my thumbnails, but never in the video. So here you go. There's the shock face, right? So the shock face, there's a story behind that. You see a lot of these people out there, these creators doing the shock face. It's almost turned into like a kind of a funny thing to do now. Am I really that shocked about the news that I'm bringing you? Actually, sometimes I am. Yes, a lot of times I am, and today is no exception. You're not going to believe the inflation ideas that the quote unquote leaders and the next leader of the United States has in mind. We're going to talk about that. To me, it is shocking and it's scary. I'm not going to make that face every video, but I do feel like that inside. I feel freaked out and shocked that this is what we have to contend with, and not just for myself, but the young people, for my kids, for the young generation in the U.S. having to grow up in this. I mean, if home prices don't come down, what are people going to do? What are people going to do? Are they going to work 2, 3 jobs? Are they going to work so much that they're going to be depressed for the rest of their life because all they do is work and they never have anything at the end of the day? I mean, it's a pretty sad situation here. But this is what we're dealing with. We're dealing with the cost of living crisis. We're dealing with leaders, bankers, politicians that look at debt accumulation and they look at spending as economic growth. So whatever they can do to keep the bubble inflated, and not just that, but getting bigger, what they're going to do, folks. So we're going to talk about that here in just a few minutes. The new leaders, or a new leader that's going to be selected in November, if you want to call that person a leader. I think it's mostly driven by the banks as far as who actually runs the economy, who drives the economy. I think it's the banks, 99% anyway. Let's start right here, though. The Fed poised to cut rates as early as September. Remember back at the beginning of the year, people were saying, no, there's not going to be any rate cuts. The Fed will never do that. Well, it's pretty much everywhere now that the Fed is going to do that, even though, again, the cost of living hasn't come down. To me, that's a shock face situation right there. Bank officials signal readiness to start interest rate cutting cycle to ease pressure on households and businesses. Is it going to ease pressure for real? Right? The debt is already at record levels. The cost of living, the home prices, just talk about home prices for a minute. Home affordability is an all-time worst level. All-time worst. It's never been worse. The peak of the housing bubble, 2007, 2008, nothing near what we're seeing now as far as the unaffordability situation and how much it costs people to get into a home. Why do you think Miss Harris, presidential hopeful Harris, is talking about a $25,000 down payment assistance program? Because she knows that otherwise the housing market's going to stay frozen. Now, to some people, that may be a good thing. To other people, you see the problem getting worse because prices are just going to go up even more. If you get a bunch of new qualified buyers in there to bid up home prices, prices will go up even higher. It's going to make the bubble go higher. So let's talk about that next here. The two hopefuls here for November. Just bring up a shot here out of a recent article. Not that one here. How's about this one? This is what we have to choose from. So on one hand, you have down payment assistance programs. And actually, Mr. T, the previous prez, he said he would be open to down payment assistance programs in a recent from a recent question. Also, he's talking about Mr. T is talking about the president should have an influence on interest rates. And does anyone think he's going to want to raise interest rates? Of course not. No one's going to raise interest rates if they have their choice. They're going to drop interest rates because they know that most of the public is too brainwashed to really understand what's going on. And when you lower interest rates, the bubbles get bigger, and then you can look and say, oh, look at all the economic growth that I created. So am I excited about either one of these two people? No, I wish I had better news for you, but I'm not excited about either one. Now I'm probably gonna make one half of you mad and the other half of you even more mad at me. But this is how I feel based on economic reality. Do you think inflation only started recently over the past 4 years? No, it started way a long time ago. I mean, after the financial crisis is when it really started taking off. 2020 was another level of a surge in the cost of living because everything that we saw that came along with the health crisis, the lockdowns, the shutdowns, the stimulus, the rescue programs, the freezing up of all these different payments and obligations that people normally have to do. And back to Miss Harris here, she's talking about also more renter protections. So you're going to have more people not paying the rent. You notice how when there's protections announced, you have a big spike in people that don't pay their rent, like 2020. So do you think it was just the people that really didn't have the money? I think a lot of people took advantage of that situation, and we saw what happened with rents because the landlords raised the rents on the people that were paying rent to make up for the people that weren't paying the rent, right? So the whole thing is just it's a dire situation either way. I don't think either one of these individuals has a real plan to bring down the cost of living because they both have to play into the illusion of debt is economic growth, that inflation of bubbles, housing bubbles, cost of living bubbles is economic growth because that's the official data that everybody looks at, the gross domestic product, the government spending, consumer spending, consumers swiping credit cards, taking out loans, taking on debt. That's considered economic growth. And no one's going to tell you that besides maybe somebody like me and maybe a few other what we call content creators is going to tell you that. So it's pretty sad here. I wish I had better hopes for you here coming up, but I think no matter which way we go, it's going to get worse. Oh, and back to Mr. T here for a minute. I think people forget too the inflationary effect of the tariffs. That's kind of where it started. That's kind of where prices really started taking off. But then again, 2020 kind of made everyone not think about that so much because of what happened in 2020 in the bigger surge in the cost of living slash inflation. But either way, it's going to be rough for a lot of people, especially the younger people, the 70% already living paycheck to paycheck. Take a look at this right here on the student loan front here. Bring this up here. 85-year-old mom co-signed her daughter's student loan years ago. Now she fears the lender may take her house. So the long and short of this is she co-signed a loan, as the title says, and now she's getting collection letters. And when she consulted with her legal professional, they said, well, yeah, they could come after your assets, including your home. And take a look at this person, 85 years old, on the hook for student loan debt. So is her daughter a deadbeat daughter? I don't know. But the fact that we have people co-signing for student loans in the tens of thousands of dollars, and is also true in this case, pretty scary, especially when you look at the cost of living right now. A young person just getting out of college, they're trying to enter the workforce and hopefully make enough money to pay off their debt and keep up with the cost of living and buy a home and all those things. Folks, it's not going to happen for most people. A few people, yes, but most people know. I read more and more of these stories where people are on the hook for these loans in their 50s, 60s, and 70s, and that doesn't even count the co-signers. And you have the co-signers that are often older. You might have somebody in their 80s and 90s on the hook for student loan debt. Sounds crazy, but it's true. This is just one story of many that I've read. Co-signer for a loan is liable for the account if the primary borrower cannot or does not make a payment on the loan. So they're giving us kind of the grade school information here on how co-signers work. I think most of us know how co-signers work. Indeed, more than 90% of private student loan co-signers on students include a co-signer who is equally financially and legally responsible for the debt. The co-signer is often required for a private debt student loan because the student borrower has a thin or non-existent credit history. So to me, that looks like a way to hook people into the loan there, is because they know when there's a co-signer, they're going to be more likely to pay the loan back. But let's just think about and dissect that for a minute. If a college education was the way to go, if it's a no-brainer and you're going to make a lot more money because you're college educated, why do they need a co-signer, right? If they're so confident that this education or this degree is important and that people are going to make a lot of money by getting this degree, why do they need a co-signer, right? If they know that the student's going to make a lot of money because they got a good education, they're going to get a great job, why do you need the co-signer, right? So the fact that they need a co-signer for so many of these loans shows you that even the system, even the student loan corporations don't even believe what they're selling, that the that the student loan is going to make your life so great and you're going to make so much more money, right? If that were true, they wouldn't even worry about a cosigner, would they? Right? Think about that. I don't think anybody, I've never heard anyone even kind of talk about that or raise the question on that. Please let me know what you think about that down in the comments. College loans, worth it? Maybe in some cases, but if it was always a win-win situation, why would the student loan companies be so worried about cosigners? All right, folks, let's move on here. Still on the topic of inflation, let's look at wages versus inflation. Now, we're going to look at the number that's way too low. We're going to look at the official CPI number, the Consumer Price Index. And NBC put this out recently here. Since 2019, basically 2020, because it's December 2019, we look at the average hourly earnings in the red. And if we focus on that, if we look at that compared to the Consumer Price Index, what they're trying to tell us is that earnings is outpacing inflation. But remember, the CPI, according to my estimates, and I think most of you would agree on this, the CPI is about 25% of the real cost of living that most people have to deal with. And just look at insurance, car insurance, home insurance, both up about between 20 to 40% in most areas just over the past 4 years. And that doesn't go along with the official CPI number. Look at electricity bills. Most areas up 20 to 30%. Some places even more just in the past 3 to 4 years. And it goes on and on. I mean, car prices up 50%. They are starting to come down now for about a year. They've kind of been on a downtrend. We talk about that here quite frequently. Actually, in our next report, we're going to have an update on car prices. It actually came down a bit again the first half of this month here in August. So that's one area where we're actually seeing some price corrections and an area where things are actually headed in the right direction. Whereas if you look at a lot of other things, we're being told that inflation slowing is good, meaning prices are still going up overall, but because they're not going up as fast as they were, that's a good thing. And that leads us into our next article. Take a look at this. You're not going to believe this. The war on inflation has been won. That's what they're saying here. And that's what the Fed has been saying. If you're angry, it's okay. It's okay if you're still angry. That's what they're saying. Why are people still angry? Because they know that the cost of living hasn't come down. But what they're doing is they're looking at this phony war on inflation, which hasn't been won, by the way, because inflation hasn't gotten down to the target. And even the target is not hit, because even if you get inflation down to 2%, that's the target, by the way. Even if you get it down to 2%, it's supposed to be an average of 2% inflation, meaning if you had 4% inflation for 4 years, then you need 4 years of 0% inflation to average 2%. Right? You get that? Is my math correct? But we didn't get that. We haven't had 0%. We need 0% inflation. Actually, we need negative inflation or deflation, falling prices, falling cost of living to average out all of the inflation that we've seen over the past many, many years. But that would break the illusion, that would burst the bubbles. And of course, they don't want that. So in the end, what they're telling us isn't true. They're telling us that average inflation target is 2%, but yet even their own practices and what they tell us and what they do doesn't match what they're saying they're supposed to do. So the whole thing is a pretty big scam, if you ask me. I mean, please let me know what you think. The war on inflation has been won. It's okay if you're still angry. That's a real article. Let's talk about the median home price. We've seen a few different reports about prices are still up year over year. They're down year over year. Everywhere you look, it's different. Realtor.com is different than Zillow. Zillow is different than Redfin. And even the Fed has their own numbers. But if you look at the Fed's median home price, it looks more like a bursting of a housing bubble. Let's bring up a chart here. This is as of the second quarter here, 2024. Of course, that brings us to the end of June. So this doesn't include July. Of course, we're not through August yet. But if you look to the right here, you see what looks like a top. It looks very similar to the top 2007, 2008. And, people think it's playing out much slower this time. Well, I mean, it's a pretty similar pattern if you look at it. Pretty similar. We did have this bump up in 2023, but since then it's come down. And in fact, the latest one, as of the second quarter of this year, it's 412,300. And if we just go into a 1-year chart, year over year, it was 418,500. So according to the Fed, we're down about 6,000 on the median home price year over year. And if you go to the peak, That was 435,000 in the third quarter of 2023. But was that the peak? Let's take a look here. Wow, it was actually 442,600 in the fourth quarter of 2022. So if you look at the peak, according to the Fed, 442,000 down to 412,000. So that's much more significant. That's a drop of $30,000 in the median home price. So I would actually tend to trust, I know I'm critical of the Fed, but I tend to trust them in this case because think about it. Realtor.com, Redfin, Zillow, they all have an incentive to make home prices look higher than they really are because they're in the business of real estate and their agents are getting commission. You know how that goes, right? So a higher home price is much more beneficial to them versus the Fed, but maybe not. I mean, let me know what you think about that down in the comments. Is this a bursting of the housing bubble, or are these rescue programs announced by Ms. Harris and other things that are planned going to keep this bubble inflated? Down payment assistance, renter protections. So now rents are going to go up even more if that happens. Lower interest rates if Mr. T gets his way, and that's going to make the bubbles get even bigger, and people can take out bigger loans and borrow more money, and prices will go up. In that case, I mean, let me know what you think about all this, folks. To me, it looks like a pretty scary situation either way. So hope you're stacking, hope you're prepared and ready for what's coming down the line here. Next report, we've got some other news on top of the car price data. Some other things I think you'll be interested in as far as the currency, the devaluation, and how we're preparing. And when I say stacking, we're going to talk about that, you know, what that means here in the next report. Everybody, thanks for watching. Please make sure you subscribe, come back for more economic news. Keep this channel alive and come back, and we'll ride this economic storm together, folks. Everybody, bye for now. Peace.